Okay, good morning, everyone. Once again, happy Friday. Today is April 24th, 2026, and this is the audio addition to the daily trade strategy brief. NFA compliance rule 2-29C, subparagraph 1, you are all certainly familiar with the disclaimers associated with trading futures, trading in general. All right. So today begins a new cycle. We'll just take a look at what's happened over this past week. Again, market is just simply, this is a composite of both the US session and the Globex session, which is split into the Asia session and the European session. All right, and for the most part, we've been just price has just been in one, kind of big trading range here. All right, this was the gap down Sunday night. All right, then the recovery, and then we got another retest, and then a recovery. Okay, and then even another test late yesterday or during the session yesterday, and yet another recovery to actually a new high. Not showing here, so let's move that up. So overnight high to a new brand new high. Woohoo! Right? Bragging rights. All right. But really it's been just a back and forth fest as the market again continues to, you know, process. Yes, happy Friday, Mark. Hopefully this is a little bit better. I'm using it on a different computer, but hopefully the sound is a little better for you over there. So I'm broadcasting this on a different computer. I don't know if the audio is any better for you there. So, as I stated earlier in the week on the daily trade strategy, you've seen the commercial, right? Clap on, clap off, right? The lights. So this is kind of was been my theme this week has been, uh, on again, off again. Okay. Uh, on again, off again, between ceasefire on, ceasefire off, Strait of Hormuz open, Strait of Hormuz closed. Okay. Um, it's my understanding, correct me anybody if I'm wrong with this, but I do think that I think wasn't isn't this coming Sunday a new kind of ceasefire or decision point, right, for negotiations? Again, I don't know. So it's kind of hard. Um, Interesting. I also mentioned yesterday or this throughout this week that headline uh, risk is probably going to be fairly high. Actually, Danny Riley in his opening print this morning, instead of headline risk, he dubbed it head lies risk. Head lies instead of headlines. I thought that was pretty neat. Yeah, it's so true, right? Because there's so much propaganda going back and forth about what's happening, and the market, of course, you get the news headline algorithms, on full, yeah, wax on, wax off. Exactly, so that's kind of been the theme this past week that as I've been viewing it. Not an easy week to trade. I, again, it's one of those weeks that the algorithms, you had zero DTEs just ripping it back and forth. If you've been watching, the options market, just ripping them back and forth. Of course, the news algorithms, in addition to the zero DTE players, and Obviously, there's, buy and sell stops at all various levels, and they just wipe those suckers out. So both sides actually you have gotten kind of, whipped out on that, right? The liquidity sweeps, as people call them, stops to the, to the sell side, stops to the buy side. Both sides have getting, whipped, right? So it's kind of like one of those whiplash type weeks for those, right? So where does that leave us? Again, just where we are, we're near the highs. Um, yes, we can categorize as all the dips being bought, so the BTF crowd, right, is still certainly active on the dips, but they're not really willing to extend the market yet considerably. But given that the market is coming from fairly retracement lows, consolidation here, we could certainly categorize this as bullish consolidation, right, at the highs or near the highs, or at the highs for that matter, right, in this area. So that's what we have. In terms of today's, action, it is a cycle day one. Let me just take a quick look at the cycle charts. All right. Excuse me. So, being a cycle day one, we'd be looking for some sort of a decline. Uh, really haven't had much of one here in the overnight. So again, the bulls certainly still control the action here. All right, this is the overnight low. And again, an average decline would be back down, near the 70, 78 area. That not being the case at this stage. My line in the sand today is 7150s. Interestingly enough, when we have these ranges like we're having, when I'm doing the daily trade strategy, so when we get this rotation back to cycle day one, so I go back to the previous cycle day one when I'm putting compiling the daily trade strategy and writing it. So I go back to the cycle day one, previous one, and I make some minor adjustments. Basic template there that I have for a cycle day one, the outline of that, and so that body of that doesn't really change. What I do change is just some of the early commentary up at the top, and then of course the levels. So when I get to the levels part, I'm looking at the levels. What I'm looking at today to import for today's levels, and I'm looking back. I'm saying, well, they're basically the same levels that I would be selecting. That's not by design. What it means is that when I see when I encounter that, is that it shows that the market has been or is in still a trading range, because the same levels that I have outlined for today's action happened 3 days ago as well. Those were the same levels. All right, so it just kind of shows that the market's just been in this range, because I do, uh, look to. I'm not always looking to change the numbers. If the numbers fall into place similarly as they have today, not making any change. So the market here is 70.50 or 71.50, right? 65s, right? I think I put 80s instead of 85s or something. 95s, of course, we got the D-level money box, right, zone up here, and that would be the same thing for the NQ. Now the NQ has already pushed up into its right D level money box zone. So at this point now, what would be kind of, and by the way, the NQ has been the leader, right? And again, as the saying goes, as goes the Nasdaq, so goes the market type of play, right? So the Nasdaq has obviously been the strong leader across the board here. And so even if you're not trading the NQ, you certainly need to be paying attention to the NQ and what's happening in that area. So we all know that. But that's been fulfilled so far this morning, early, again, on to new highs. S&P not quite that far, but got pretty close to the initial D level there, about 5 or 6 points, 5.5 points or so close. So the theme basically hasn't changed for, at this stage, right? So I think the idea is, aside from, these news spikes, right? These wicks, right? Long wicks. I call these long tails. People call them getting wicked or wicking, whatever term you want to use. I just call them long tails. It's just the term I've always used, but wicked is fine. But aside from these long tail wicks, I think when you kind of remove them from the effect of what they had at that moment, if you kind of remove them, you kind of normalize the price action, right? So if you take these, you know, strong moves down, yes, they were impactful at that time, but if you kind of remove them out of the equation and you kind of, I mean, basically the market is really, aside from those, jolts at the time, we've just basically kind of been in this rotational value area, right? So at that point, the way I'm kind of reading this, when I would, if I'm to remove those from the equation, I'm just looking for normal backing and filling, value area, developing value, or actually value area low down to the 2025s area to elicit, if we get a rotation back there, I'd be looking for a buy response, right? So I'm kind of, just normalizing things back through the play. All right. In terms of today's programming, I am heading out at noontime, so it's going to be half day for me, and we'll take it from there. The room will stay open, the charts will stay on, but I'm just gonna get a breath of fresh air, as they say, out today early. All right, so let's have a good session. Let's see what we have on deck. And again, we start the day off once again in a more neutral location, and we'll take it one step, one trade, right, at a time. All right. All right, so let this just kind of let the opening range unfold on the crude oil front. Opening range, let me bring that over. Okay, crude oil shorts are playing out on the opening, and we got to stop in place at entry now, and now we're just waiting for the other two to finish off their 5-minute opening range sequence. All right, so the norm for a cycle day one would be for a rotation lower below the prior close, right, to qualify for a normal cycle day one. All right, pre-opening here, we had an A4 short, as you can see. That was pre-opening, so if you were playing the game, right, before the RTH opening, you had an opportunity there. I did get a small move above the opening, excuse me, the prior high. Again, that was during the pre-opening, pre-RTH. So it didn't quite hit the D level, which was at 95s, only get up to about 89s. But again, that pop is still playable if you're looking for kind of that look above prior high and fail rotation back down. Again, did not hit the D level, but it would have qualified if for those that are playing that type of pattern. I did not catch that, so full transparency there. All right, so what do we kind of do every day? Early on, we try to frame out, our sandbox. And again, for those that are unfamiliar, we look for some kind of key high-low range to work with, to kind of outline. But what we can always use by default, all right, is the developing value high, right, value low. Okay, so that is, kind of, you can always use that as a sandbox. Sandbox is just our playground, just a range area that, prices trading within, right? Identify kind of a high area, a low area, and that just kind of frames out what I refer to as a sandbox, right? If the sandbox shifts, which it certainly can do, right? The idea then is, we would shift along, with that action, right? Staying always in alignment. We would actually, we actually know in advance not what will happen, but rather where the shifts are potentially would occur or continue for that matter, right? So if we're heading down south this way as we are currently right now, so a break below this developing, value low, right, would be a shift of the sandbox lower potentially, and we could get a move below, but we would also want to be looking for a reclaim, kind of a poke below, right? Look below and fail, peekaboo type trade, pattern. So these are all things kind of just part of the analysis, part of your ODA loop in preparation of what may occur. That way we're not surprised at anything that happens. But what is the current lean? So right, bringing us right back to real time. What's the current lean? The current lean is down. Okay, so off the high, current lean is down. Don't know if it'll continue, but that's what the current observation is. Potentially, where would that shift? We'd have to, again, we'd have to get back to higher levels, right? And kind of this zone up here, right? To at least get some sort of shift. But if that, excuse me, if that were to occur, you're going to see stages of that happening, unfolding. Okay, so in the meantime, we have a down move. So what are we looking for in terms of trades? Right? Premium type sells, right? Kind of bounces and looking back down, right? Until something shifts. Yeah, premiums. There you go. Ram has it, right? Premium sells. So looking for, CCI up in this area here. Looking for, again, a push up, a failure, maybe, obviously we're looking for some sort of a pivot area, right, to develop. So in one sense, we already know what we want to be doing and looking for that to occur. In the meantime, you may want to just outline, key pivot levels, right, using your raise, right, up here, right. You can put some, rectangle boxes, whatever works for you, whatever you need to. to outline this stuff. All right. Another thing to observe, perhaps, VWAP is relatively flat. So with the relatively flat VWAP, again, in the context of using that, again, we could see some rotation back and forth. Anything and everything goes when we observe the market, right? But we got to narrow it down to at least, what are some of the key pivot levels? So we call it maybe 70s up here, right? 68, 70s. That would really need to shift on. Remember, we're looking at a 750 tick chart here. So we're looking at execution level pattern. You go out to your 5-minute chart or whatever size you're using there, 68, 70 zone, okay, is really of more of importance, right? You could use your 5-minute chart here on the left. So we get this with some zigzag laid in there, right? So you could go, this area right in here. So that's what I was saying about 68, 70s, right? So there's your pivot areas, right? In the meantime, you basically have, here's your little downtrend line there, you kind of like a channel action going there. So again, price would then need to do what, right? It would need to work its way back above this level, hold, and that's why I said, the shift occurs in rotations rather than just, one spike up. So that's kind of the structural pattern that would need to occur for a move to the upside. A reclaim back above 68, okay, 70 from a structural standpoint. In the meantime, right, that's not the case. In the meantime, we still have directional movement to the downside. All right, so that's kind of the outline there, a little bit more in real time. If the 750 tick is too fast, kind of for looking for structural analysis, widen it out to different time frames, such as the 5-minute or 3-minute or whatever time frame is you find works for yourself. But always kind of understand where the potential for a change in the current dynamic would need to happen. What area? What is the current dynamic and what would need to change the current dynamic? Should be able to find that answer fairly readily. And then you say, okay, that's what needs to happen if it's going to change. In the meantime, I know what is happening and I'm just going to stay in alignment with that until it changes. Okay, so let me go back to this. Yeah, so that rectangle that I drew on the 5-minute, it overdraws here on the execution chart. So that that 68-70 zone is essentially, that's what we just outlined on the 5-minute. So the things that I'm showing you and presenting should eventually become kind of second nature to you. Should be standard stuff that you're questions that you're asking, areas that you're, outlining. Okay, so you want that to be kind of a standard approach for yourselves. great, John. Great, John South. Great, very nice. All right. All right. All right. Not doing a whole lot in the middle here. Yeah, it's a confirmed lean to the for the sell side, true, but you're right, Ram. I mean, there's not a lot of energy back and forth. Remember, when you're in the middle like this, there's generally not a lot of energy. Um, the best ones come, the best moves come from these edges, and failed, breakouts, breakdowns, and then they reverse. You get a lot of pent up energy there. When you're in the middle like this, is not my certainly not my favorite place to engage because the randomness does the up and I mean, yes, we can see the lean that's still kind of favoring, you know, historically now favoring to the downside, and so yes, we want to be aware of that. But again, is this right around the middle VWAP point of control area, like the highest quality area to enter a trade? From my perspective, it's not. From my experience, it's not. Because the market can just easily jump back and forth, right? So what's your stop? What's your edge stop? If you even if you're using 5 or 6 point stop, I mean that can get swiped in a heartbeat in the middle here. So we want to just be patient for, a cleaner trade that has some energy associated with it. Obviously, first shifts tend to have a fair amount of energy associated with them, right? So we like those first shifts. All right, so I'm not going to do a lot of jib jabbering here. What do you I mean by the first shift? When we break a high low pivot area and we get the ATRs shifting with the stackers, with the EMAs, right? Again, when I say first shift, I'm really referring to like first pullback, right? But it's still a first shift pullback. I mean, all these terms kind of are synonymous. When I say first shift, I'm really kind of referring to a shift and a pullback. Hey guys, if I can ask you as well, all right, if for any of you that are happen to be following me on the PTG on the X feed on the Twitter, right? If you get a chance, right, and you're looking at that, just give it a like, right? Trying to get the algorithm there to kind of the more likes and the more retweets that those things get, kind of whatever the social media algos, right? Or throw some comments on it as well, engagement, right? All those things kind of help, the algorithm kind of improve the engagement, right? Yeah, no, for anybody that is already doing that, of course, thank you very much. Please continue to do that. Um, just trying to help the engagement, you know, uh, I've become a bit more aware of that. I typically in the past, I didn't really give two hoots, but we're doing a lot, we're trying to do a lot of that with the Pitbull Trader stuff. And I figure, well, I might as well try to start doing some of that as my well, for PTG. Um, So, and anything there along those lines certainly helps. So, do appreciate that. Thumbs up. Give it a like. Well, it's going to be one of those Fridays or no, where we're just kind of dragging on here. Right? These have been the rhythms, right? We get kind of, I don't know, the way I like to classify them is, you know, hours of boredom and moments of stark terror in terms of when the news hits and the algorithms whip the price around. So yeah, bust out the guitar. I don't know. If I can't start making any money, I'm going to have to start busking out there in the to earn some money. Barbara, maybe you and I can busk together. There you go. All right, John B. Okay, we're putting the band together. The PTG project. How's that? The PTG project. Just like the Alan Parsons project, right? It'll be the PTG project. All right, Ram's in on the drums. right, who's playing bass? John, which instrument are you playing? Who's on the keyboards? Barbara's on the keyboards. Rom's on the drums. John's playing the tambourines. That's cool. We'll take that. Rhythm section. Need the rhythm section, right? You always need a rhythm section. Wait a minute, we got to get Bruce in here. Bruce had a PRS on his wall. So Bruce F. I saw a PRS on his wall hanging there, so we got to get Bruce involved. There you go. All right. All right, there's my home rig. All right, just kind of still in this middle here. Not much happening. Hey, how come that's not posting to that? Oh, interesting. Oh, I know why. Okay, never mind. Talking to myself. Yeah, the 920 pullback, we could classify it as the first pullback, Rom. Yeah, absolutely. All right, we're just going nowhere fast. Zoom, zoom. Again, that A4 from pre-opening scaled out, so we got at least a good trade there on the board, but not a whole lot. Again, the lean, obviously, as we've talked about already, kind of still kind of to the down, but all depends how you want to put that together. All right, so for a shift, we'd probably lower that to the 60s area, 60, 65 for bull shift at this moment. All right, so again, pretty much back up in this area here, right? So we would need to get a move above that, sustained up to shift. In the meantime, again, as the read, just to kind of stay leaning to the short on any bounces if you're looking to take those. Not really anything super clean, but again, the lean is there. So how you want to approach it, just stick to your plan. So that one is done. So we're gonna scoot that down there. Hmm, interesting. All right, guys. Again, not a whole lot to discuss here, as you can clearly deduce. Cat Friday is what? Capital Preservation Day, and it certainly qualifies here at this stage with this type of action. Doesn't mean you don't trade, doesn't mean you stop or anything. It's just that be a little bit more discriminating. All right, if you've had a good week, again, the idea there is you may want to just kind of throttle it back a bit. If you haven't or you're somewhat behind, and you feel as though you gotta play catch up, try not to get into that mode, because again, that could lead you to just trying to force a trade that's just not maybe fully developed, or the full criteria is not there. So a lot of times, again, you can find yourself digging a ditch that you didn't want to do. right? So what's the goal on that? Just gotta, you know, just gotta stay committed to the process. And um, I know I miss trades quite a bit, but again, on Friday doesn't mean, like I said, doesn't mean you don't trade. Just kind of change your mode of thinking a little bit, or adjust it, and just be a bit more discriminating. And say, I'm not going to get into a deeper hole going into the weekend, or I'm not going to give away, too much of my progress this week going into the weekend. So, oh, wait a minute. We didn't get Steve involved. Steve 9. Oh man, we got to get you involved into the band. Yes, can't leave you out. So Steve 9's in the band. All right, actually, prices hanging out pretty well around our line in the sand today, 71.50. So I guess I got the line in the sand correctly outlined. Incoming A10. Yep. Incoming A10. Yeah, we get a discount right here. It's right in the middle. Again, it can work. It's just not my favorite area, but it can work. You know, when we're in the middle like this, you just don't have a lot of momentum either way. But if you grab now, listen on this A10. Okay, so again, the way I have it set up, and again, you can configure it, however you want. But the way I have it set up is it needs to touch the A10 line. Okay, it needs to touch the A10 line. I have a wide zone here. I think I have a 12 tick zone. Okay, threshold zone. So a lot of times, again, when I developed the threshold zones, the idea there was just an alert, okay, that the price is in proximity of the A10. All right. But over the eons here, we've got it to the point where, again, it'll trigger if you have it set to the zone edge, the upper or lower, it would trigger, or if you, let's just say you narrowed that zone down, okay, to let's just say a few ticks around that A10. So that's another, let me just stop this shaking here. Um, that's another thing that you can do. Like right now, everybody sees the zone edge, right? It's fairly wide, okay? But that the idea there is it's an alert that price is coming into that zone, right, near to the ATR. Okay, number one. But if you really want to make it where, like, look at this, it just missed the A10 line. So it didn't trigger. Now that could be frustrating. Damn it, it came real close and then it didn't trigger, right? Other times it'll rip right through that line. Again, whatever that momentum is right at the time. Yeah, your box is 2 points. So yeah, so what I was going to say, thank you, Steve. So what I was going to say is, you can narrow that threshold zone to make it tighter. Okay. So what is the idea for doing that? The idea for doing that is I don't want to short them on a wide or enter on a wide zone, but I want to get close. like within a matter of, 3, 4, 5 ticks, all right, or whatever that is, that, Steve here has 2 points or 8 ticks. Um, if it gets that close, you're willing to enter, not necessarily on the line, but close to that line. Oh, ±2. Okay, great. So ±2 points, all right, away from that line. So that becomes the zone. All right, so let me show you, since we're right in the middle here, let me show you what that looks like. All right, so you'd go into the strategy, right? And so right now I have a 12 tick zone. So 2 points. So that's 8 ticks either side, right? So I would put 8 ticks on the zone, right? So let's narrow that down, right? So basically I just narrowed it down from that, right? So you don't really probably didn't see it, but it did narrow the zone down, right? You can tighten it up. And then you can adjust, like I still have it set to ATR entry, but if you can set to zone, okay, it would trigger, right, once it touches the edge of the zone. So the closer you have it, to that ATR line, the tighter it is that'll execute even before hitting the actual ATR. All right. So that could be an option for you, right? If you find that a lot of times it's missing, and what are you giving up? You're giving up taking the trade right at the ATR versus just, where it just skimmed it, but it didn't touch it, and it would have been a good trade, right? Type of thing. So yeah. Um, yeah, so you can scale in for a total position. There's a number of different ways you can configure this, right? But you can configure it where, you can enter a partial on a zone, you can enter another one at the ATR, and you can enter another one actually on the opposite zone. Okay, so we should maybe do a short webinar on that, or a little workshop, right? And that's another thing in terms of workshop topics. We can probably kind of go into some of the functionality of the various tools that we have. I think that would probably be a series that we could do. All right, anybody interested in that? Getting a little bit more understanding of the various tools and the various options that are related to the tools. Okay. Um, on the internals as well. Yeah. Okay. Yeah, definitely. All right. So good. All right. So we can do that. I know it's, like Oris just recently, Oris has the package, right? And there's a lot to the package, right? There's a lot to the various functionalities of the various tools that, yeah, I think that would be a good idea. We maybe start a short video series on various tools. So we'll pick, just for instance here, we'll pick the DV strategy, okay? And we'll kind of just walk through the settings, okay, and what you can do with them. You know, there's no default settings necessarily, and that was one of the things when I created all the strategies, is that I didn't want to put, a hard code on, the various strategies, like, okay, this is the only way to use them. I left it open inputs, for the reason that, many of you can play around with the settings and find actually, you know ideal settings for yourself, and how you want to, trade and handle it. Okay, so yeah, but in order to get the most out of this stuff, I'm just thinking offhand is that, we should probably kind of start some sort of a series to hit the tools and how can we use them. I think that would be kind of the next evolution of the toolbox. So we can do that, over a period of time. Just do like maybe one video session a week, one workshop session a week. I'll think at the beginning to set that up. We do it in the evening. And again, if you cannot attend, it'll be recorded, and we'll add that to the website area. Is there a video on what? The internals? No, I don't have a video on the internals. No, we can create one as part of the workshop. Because I've made changes over the time over time to some of the settings and so forth. And when I make kind of a change, I don't record a video of every single change. I mean, that would just be an enormous task for me. But now is probably a good time because I'm not really making any major changes at all to the various settings. So today, this would be a good time to begin review of the various strategies toolbox settings so you guys can understand at a deeper level and then maybe, make some adjustments to how you'd want to handle them, in your own plans. All right. All right. So that's how we'll begin. Of course, if you have additional topics that you want to discuss in a workshop, please email them to me. Don't just send me on a chat here because I won't remember it. But send me it on the email so I can categorize them and then kind of put them into a schedule for us to do. All right, well, sitting at VWAP again, not doing a whole lot. Let's take a quick look at where we're still above the prior close. So technically, though we are on a cycle day one, we don't have a cycle day one normal yet, meaning that we don't have a decline below the prior close. So cycle day one still is fairly, strong. Change there would be taking out the overnight low and the close, and then that would, potentially open up maybe a deeper rotation lower, but for the time being, that's not the case. So keep that 30s area, 35s in mind for a possible shift lower. Yeah. Yep, I agree. Yeah, so this is the type of activity or action that you're still in observation, right? Orientation mode. Yeah, that's okay. You can ask her in the chat. We just still in observation orientation mode for the most part here. I mean, I don't see anything that's highly actionable, right? So the decision action cycle. I mean, we do have the auto X here for the A4, that's gone off a couple times. And again, there's just small little kind of scalp type trades there for the most part. Nothing beyond that. Um, yeah, yeah, there you go, John. That was good. Yeah, I mean, you can take trades in the middle here, right? I mean, again, it all comes down to, what your trade plan is. Okay, so like for instance, in here, okay, you got this little move up and the pullback here. Okay, is that playable? Just a rhetorical question, more you don't have to answer me, but is that playable? Well, it is if that's, to your trade plan and what you're looking for, right? Is this playable? I mean, this is just the mirror image of it, right? Is that playable? Right? So is this one playable? Is this one playable? Again, just a rhetorical question, right? Each pattern in and of itself, right, is a pattern that we can identify, right? It took out the lows here, took out the highs over here, right? You got a kind of a little pullback here, you got a little pullback there. So are they playable? So functionally, pattern wise, they're of the type of pattern we tend to look for. Okay, so it's the idea when I was talking about, discounts and premiums. Okay, every discount, every premium, right, is valid mathematically because they're doing what they're doing, right? Yep, I'm in a discount world. There it is. There's your star. There's your signal. Okay, premium, same thing. Are they valid? Every single discount premium that shows up here, they are valid based upon the quantitative definition. Okay. Qualitatively, they could be, and I say could be because it's going to be based upon, the overall context and what your plan is about, what you're looking for. But quantitatively, they're valid. Qualitatively, they may not be to the degree that you want, to the degree that you've researched, to the degree that you've practiced. Does that make sense to everybody? All right. Now, I'm not trying to be a downer here or anything. What I'm trying to get across is that you need to make sure that the research is you've done enough, the quality level of research that this is the type of pattern and context that I want to play that particular pattern in. Am I a super scalper, for, a point and a half or 2 points or 2.5 points? Could be. If I am I looking for something a little bit more structural at a coming off of a key location or at a key location, and I'm looking for kind of a larger, degree move, again, that's a whole different approach, but you're still incorporating similar patterns, right? So a pattern here or a pattern here, again, these are mirror images of themselves. So the same type of patterns could occur, on a breakout, of a key level. Same type of pattern here, right? This would be kind of this play. It would be kind of the same thing, this play, right? Same type of pattern. Context is different though. So be sure to know what the context that you're going to take the trade from. All right. I just personally find it just doesn't mean that what I find is what you should or should not be doing. But I find sitting in the middle here, around this big cluster, right? It's harder to get a good clean move the way I'm looking for a move. I'm looking for something more substantial potentials in there. All right. And when you're in a tight area like this, there's not a whole lot of room for slippage, meaning that, entry placement. I mean, you got to be, it always looks good after the fact, doesn't it? Like I can draw this and say, boy, we could have gotten right in here, right? Or you could have gotten right in here. It always looks great after the fact. It doesn't look so clean in real time, but it always looks great after the fact. So again, the idea for me is if we can get a move, in this case, above a key area and then some sort of a pullback, then there's kind of room for the market to kind of the potential that is room for the market to move. All right. I think the odds begin to favor a little bit of a better expansion move. And that's what I'm looking for is I'm looking for an expansion move away from an area versus within the context of the area, you know. And yeah, it always looks great again after the fact. Wow, we could have sold them up here. We could have bought them down here, and we would have taken something away from each of those type levels, right? So, okay, so that's fine. So that means here, well, we're coming back up to this level here. Are you gonna lob a limit order there? Limit sell order, right? Because you want to catch that edge, so you really kind of need to have a limit order sell order there, right? How are you going to play that? What happens if it just rips, right? Again, all these things are the unknowns, right? The variables. So that's what I'm saying. Always things look fantastic after the fact, and then most educators out there, they use that to their advantage, saying, well, if you sold them there and you bought them there, well, I don't use that approach because we know that's fugazi. John, I have an image for that. John is saying I'm going to sit on my fingers. Here, John, use this image. Sitting on hands. Use that image. Copy that image. Put it on your desktop. That's not a perverted image. Just sitting on hands. All right, so here's our theme video for the time being for this early morning action. This morning's theme video. Anybody know what it's going to be? Want to take a guess? This morning's theme video. Come on, make a guess. What would it want to be? What would you want it to be? Less than zero? Okay. Okay, I'm gonna put it up. This is what I think this morning's video theme, okay, is. Ready? MC Hammers can't touch this. Play it. It's a great rhythm. I think it's a great rhythm song. All right, so at some point, the market's going to decide, right? If it wants to continue to push higher and expand. I mean, we've been consolidating pretty much since the opening. All right. So yeah, so obviously bulls continue to have control. Bears have not really had be able to make, any real progress, push it down a little bit, but all of that continues to get absorbed. So just the bulls continue to, it's the BTFT, right, crowd that's still quite active. They're there. Um, I just think there's still a lot of portfolio managers that are underexposed, and they're using any opportunity. I mean, they're not thinking the Iran conflict anymore. Okay, that's long gone. What they're thinking is, I'm under invested, I'm underexposed, I need to catch up. It's the FOMO, right, type of thing. They're not trying to play the game on what the Iran conflict's going to be. That's already passed. That effect, your shock and awe and all that stuff is already gone. So now I need to, I'm behind. I don't have enough exposure in the tech. I don't have enough exposure in financials. I don't have enough exposure overall. Need to keep buying them. So again, you kind of think about the backdrop of the people that run, the market, right? The people that run the big monies. They're not where they need to be. Yes, they own these companies, but again, it's all percentage of their allocations. So in the aggregate, collectively, a lot of these people are playing catch up. So I think that's what part of the reason, I think, why we have this huge trading range this week, is that we hit the all-time highs, right? Portfolio managers, they don't, again, we talk about chasing, right? They don't want to chase. Some of them are kind of forced to a degree, but then they say, okay, I'm not chasing. We're going to wait for some sort of a backing and filling action, and you get the pullbacks, and then all of a sudden they start coming back into the mix. Remember, they're buying all the different stocks, right, for their allocation. They're not buying futures. Well, they could be, but they're not holding futures in their portfolios that way. They want to buy the individual stocks, right? So various stocks have to come back down to levels where they want to continue to add those, and of course supply of those stocks need to be there, right? Just because price has rotated lower, think about this for a second, right? Where a stock or whatever it is a quote, a price is being quoted on the screen. For you and I can buy one share, 100 shares, not a big deal, right? 1,000 shares, again, not a big deal. You think of yourself as a portfolio manager and you're trying to buy 500,000 shares or 1 million shares or 2 million shares or whatever the size. Now that becomes a little bit more difficult. Just because price is quoted at a level doesn't mean the supply, the liquidity is there at that level. All right. So, and also these portfolio managers, FYI, if you didn't realize, they don't have a one price point, entry, because the supply or demand, if you're on the sell side, may not be there in the size that they need. So it's always going to be a range, always. This is when I was doing it back in the day, was working for these folks. It's always a range in price. If price gets down to certain areas, you try to scoop up as many as possible. That's why market on close imbalances are so critical. Even if you're paying, again, we should be paying attention to them, but they're so critical because the exchanges guarantee liquidity at the close. So with a guarantee of liquidity at the close, okay, that's why it's important for the market to to be paying attention to what's happening at the close over a series of days or weeks for that matter, right? So why? Because we can see where the money, that's cash. That's cash money. That's not futures. Yes, the futures can react because primarily the futures are a hedge, acts as a hedge to that. But it's really the cash component, which are the stocks, that really matter because that's where the mutual funds are, you know, that's what portfolios that they're holding. So it's always good to pay attention to what those market on close imbalances are. And the reason is the liquidity aspect. But during the day where we live and trade, that's why it's important to understand what the dynamic is driving the action. And those are the individual stocks. So whether you're looking at overall internals or if you're looking at the various sectors, I look at the sector ETFs. That's where I focus all my attention is on what sectors are driving. Ram was talking about internals earlier, right? I watch sector ETFs, exchange traded funds. Where's the money flowing throughout the day? What sectors are leading? Not just today, but what sectors have been leading. And again, FinViz, right, is really good to that. I think I mean, it's inexpensive, free actually, and it's a great way of. Anybody use FinViz? Bueller. All right, so FinViz, financial visualizations, is a great way of seeing where the money has been flowing. So 1 day performance, this is the intraday current. So technology, right? Basic materials, consumer cyclicals. Those are at the high edge, right? Financials are about flat. Healthcare, which is more defensive, right? Energy, it's a small sector weighted, right? Communications, not that great, but again, obviously, consumer cyclicals, technology, those are heavily weighted, right? But right now, you can see kind of this split. Do we still have audio? Just want to check. Right, you can see here we're basically, kind of equal, with the split today, right? And again, financials are kind of neutral. So yeah, we got kind of sideways action. But what's been driving the market over the past week? Ah, right? You know, well, now consumer defensive, right? That's some of those big names, right? Thank you, Oris, right? Um, okay. Uh, so you have defensive sectors and you have more aggressive sectors or risk on sectors. So risk on sectors would be technology, naturally. It would be consumer cyclicals, okay, industrials, financials. Those are the kind of the four core risk on sectors. Okay. Then typically healthcare, some kind of basic materials, consumer, what's the other one? It's yeah, it's here, consumer defensive, they say, right? So consumer defensive, all right. Real estate's not really doesn't have a high, utility certainly is not, um, a market leader, right? So basically the risk on would be financials, industrials, cyclicals, and technology. Those are the four main ones. And then healthcare, consumer defensive, right? So risk off ideas. Energy is its own because it's only a very small sector. I think it's like 10 or 12%, right? But that can drive obviously, again, that with some basic materials, all right, that's kind of their own little subset. So the idea is, the question is, what's driving today? So that would be I'm sorry, not the 1 week here. I'm sorry, the 1 day. Right. So the 1 day performance, what's driving today? Okay. What's driving this week? What has driven this week, etc. Right. So you can see where the money is flowing. So it's a great little visualization of um, action of this, currently and what's happened. And then you start looking back and say, well, what has the market done, with that, right? And again, you can see primarily the groups that have been a more risk on have dominated the action over this past week. So again, even though the market's rotated back and forth, buyers continues there on the dips. So, all right, on this configuration, we have broken structure to the upside, but some resistance on the left. You wait for a clean breakup, or you wait, or if we get a pullback, would you consider a pull? So, yeah, so it all kind of depends how aggressive you'd want to be, right? So we still got highs up here, right, that haven't been taken out. Okay, so, and we've been kind of sitting in this area here. So we want to start breaking it down a little bit more, all right? In that, and that's why we outlined the sandbox. So what has been the sandbox up to about the 65s, right? So as you can see here, it's kind of started, slow grind, but we're really holding above that upper edge of the sandbox, right? So again, the lean became a little bit more favorable for longs, but again, there's no hard breakout yet, right? That's the volume pattern there. So there's really no hard breakout yet. So you can wait for kind of a little bit more energetic breakout. That's one way. The other side would be, I guess, more on to your question, if we get a pullback into kind of like this area here, right? Could you buy this? Yeah, you could buy this. But again, make sure you have the proper signal that you're looking for. Does that make sense? All right. Always be considering like what's the current lean, right? And like we can identify even right in here that the lean shifted, right? Favoring longs. Remember, how I'm putting this, how I'm stating this is not that, okay, it's there's your buy signal, boom. Rather, when we get these little shifts and with the action we're getting today is not like robust. So we get these small kind of stealthy shifts in the action. But nonetheless, right in here, things did begin to favor longs. So if you were short from an earlier trade, I would not want to be short. I'm just saying, fine, I'm out, done. Let's flip the script. Now, you can see here, well, there's no pullback. Where's the pullback? Where's the pullback? There really isn't one to play, right? I mean, there was not this one very light, not even really a pullback there. So there's really no pullback. So this is just kind of these are the stackers, right? So the bull bear stackers. So that's a bull stacker, and the bull stacker will always come first before pullbacks. It's just the way they unfold. So if you start saying, say, hey, I see a shift leaning to the long side, okay? So then again, what's your course of action if you have one at that point? Your course of action could simply be, I want to buy one or two just to get on board, right? And then if the market pulls back and gives us a pullback, I'm going to look to add to that, right? That kind of helps you in a way where, well, if it starts grinding up like it did, well, at least I have something, and I'll kind of hold on to that as it continues to grind, higher if that's what it wants to do, because we may not get an early pullback. Now, if we got a pullback up here, yeah, that's still going to be considered the first pullback, but you've had kind of a fairly, decent move so far, right? From the 55s to 70s now, right? So this is the kind of the conundrum that, we can find ourselves in. One, you want to be long, right? And typically you're trying to be patient to wait for some sort of a discounted pullback. But what happens when there's no discounted pullback that happens, right? And then you can get a little bit, um, it was a pullback, but again, did it reach discounted level, right? Okay, so all right, good questions. Good identification. So here's the thing there, right? You got an A4. Okay, so let me clarify something regarding A4 versus discounts. Right. Good. All right. Okay, so an A4, let me just write it up here. An A4 is not, I'm going to put equivalent to a discount or a premium. Okay? An A4 is not, so that little squiggly line means it's equivalent, and I put a line through it, so it's not equivalent to a discount or premium. Don't conflate the two, right? You can have an A4 and not have a true discount. Many times, though, they will be A4 and a discount at the same time. Okay, so just understand an A4 does not need to be an equivalent to a discount or a premium. Does that make sense? Right? So yes, you got a little pullback here to the A4, but we really didn't get a discount. So no discount here and certainly no discount on price. Is that a thumbs up? Understanding? Okay. Yeah, and you have the, kind of the LAP, right? Law of alternating pivots here, which was resistance, okay? And moving over, right? Kind of turned into, right, support. So you had, all right, um, you had that kind of shift there. If it doesn't hit a discount, does it mean it's more strength? Not necessarily. I'm not going to hit that category that way. Uh, I just think about it. It's a relatively shallow pullback. So shallow pullbacks, regardless of where, you know, uh, a shallow pullback. So what's a shallow pullback? How would I define a shallow pullback? There you go. So that'd be the next question. So a shallow pullback, would certainly be one such as this, right? Where it kind of just comes into the fair value zone or right around, the 34, okay, or maybe between the 13 and 34, that area. Remember what it would be a discount based upon price. What's the definition of a discount based upon price? Price at or below the 89, okay, with the 34 above the 89. Okay, remember the definition, the way I've defined it in the beginning. Price at or below the 89. So this would be what we would consider kind of a normal discount. Would also you'd have the CCI come down also into discount territory. Okay. All right. So that would be kind of the normal kind of a discount, right? Kind of a pullback down to that and come back up. You get a discount, come back up that way. But a shallow pullback, which is really, it's not a discount, right? So shallow pullbacks do indicate, or they would imply, greater amounts of strength because the sellers that pushed this down, what happened to the sellers that pushed this down? They got absorbed pretty darn quickly, didn't they? And they were not, the sellers that is, were not able to push it, below another pivot level. So that pivot level there even just got sucked up. Okay, so that action would imply greater strength. Does that greater strength implication mean it's going to rip higher? Does it mean that? Doesn't mean that. Could happen, but doesn't mean that. That's not the result. It just means that the sellers are not that strong, and the buyers, now are more willing to pay, because why are the buyers more willing to pay? Number one, they have them to buy. Again, institutionally speaking, we're trying to track the elephants here, not us. And if the price isn't coming down any longer, and somebody out there has an order to buy, they're forced to buy. Not that they're short or anything, but they're forced to buy. That hey, selling is not coming in, right? Over the now remember, time's happening here, right? So I need to buy so much within a certain period of time. So all these factors kind of roll into the whole composite action as we're talking, right? I'm trying to break down some, individual decisions people may have out there institutionally. But for our purposes, I don't care what somebody else has to do, right? I'm more interested in what is happening. And again, this is the whole about idea that the OTA loop, right? What is happening? Well, market is, it's not coming for sale anymore. If it's not coming for sale anymore, then the assumption is it's more likely going to go higher. I mean, how can you not make that assumption, right? So if that's the case, then what side of the trade should I be on? Well, we know always the side of the strength. Yeah. So you ask the question, so right, should I be short in that case? Of course not. If the market's not coming for sale and it's right, and the whatever pullback does occur is relatively shallow. And again, I use the term relative because you have to assess whether or not it's an aggressive deeper pullback or it's a relatively shallow pullback. Shallow pullbacks imply strength in that direction. So then that can lead you to say, if this little shallow pullback here, and let's just say you were looking for it down here, You're looking for, a discount a little bit lower, and it didn't happen. And you really wanted to kind of, establish a position to get on board. And then it kind of pops up here. What are you left? What's your choice left with? Your choice is left with, I have to buy them in here, and I'll put my stop below this low if you want to get on board. That's your choice, right? Because the market's not giving you what you would like to see, which would have been a deeper discount or a deeper move down, right? Retracement. So these are all the constant decisions that you're faced with. And is that chasing? Not, this is not chasing. This is like, well, the market is kind of moving higher. It's not really coming for sale. The assumption then, the expectation is it's going to move higher. That's where we all live, right here at the right edge, right? Is it going to move higher? You have to make that assumption or not make that assumption. It's all the thought process. And then you decide, all right, well, now there's no, trigger here necessarily, right? You have to kind of create your own. You got to say, well, you got a little zigzag pullback here that didn't go too far. Now we're back up, right? 13 EMA is up, 34 EMA. They're all kind of pointing in that direction. So now your decision is what? You can easily just, hey, I just want to get on board. So buy one or two, whatever, and just get on board. Is it wrong? No, you know. So all this stuff is all the various, kind of reading price action and decisions on what you want to do, how you want to act. Okay. That's why I was taught years back, right, when I was learning, ask the proper questions. Come up with a series of questions that are helpful rather than, will this happen or will that happen? I couldn't tell you how many times that was drilled into me years ago when I used to ask that same question, will it happen? You know, it got to the point where, the guy I was working with, or working for, my mentor, like kind of slapped me silly. It's like, don't ask that question. It's a wasted question. You're wasting energy. You want to find out? Go buy it. You want to find out? Go sell it. But what happens if it doesn't work? Do you have a plan for that if it doesn't work? So that's why I kind of, echo a lot of those same, comments, to everybody here is like, so do you have a plan for that if it doesn't work? And don't ask with a question will, because you won't get a good answer. And if you want to get on board, just get on board, you know. And if you don't want to get on board with, full contract size, but you want some exposure, then just reduce your size and get something on board. If you want to really reduce your exposure, put a micro on. Again, you may not make a lot of money with a micro, but it's perhaps more, I need to put something on. It's just one of these, I need to be in alignment. I need to force myself to get into alignment. I need to train myself. A lot of this is training yourself to do certain things. But if you don't want to, expose yourself to a lot of risk, but you still need to train yourself, okay? So you can train yourself with micros until you build that confidence up, and then you move into the minis, right? Just like training a pet. I'm not saying we're pets, but just like training a pet, right? Once you train a pet, the pet's going to do the same thing over and over again. Roll over, Rover, you know, you know, give me your paw type of thing. Put out your hand. Well, what's the dog's reaction? It's going to give you a paw, his paw. Why? Because you trained it to do so. So when you open up your hand, dog's going to put his paw on your hand, right? So it's kind of this training that you need to do, because if you don't do the training, you're not going to do the reaction, or that expected reaction, right, is not going to be there. So if you're fearful because you don't want to lose any real money or anything, do it with micros. You're not going to, what do you lose, a tenth of the value? I mean, it's nothing. Do it with micros. You have to develop some sort of routine. Yes, certainly trust the process, but again, you can trust the process, but not trust yourself executing the process. Right? So the process may be sound, but if you don't trust yourself to engage in the process, then that's where the weakest link is going to be, is it not? So trust yourself. All right, I'm going to end the stream here. We're up on the 2 hour mark, and we will conclude the stream here for the week. I will stick around for the next hour, if you still have any questions and comments, but we'll end the stream here and we'll carry it into the weekend. All right, so have yourself a great weekend, and then we'll reconvene here on Monday.